be stressed. I'm going to say this quickly. A lot of people think that financial hardships are based on where you come from, the amount of education you have, all kinds of backgrounds, including politics. It doesn't. What it has to do with is knowledge. And if you don't know what the people that do have money know, you're going to remain in the same position. I'm done.
Okay.
Okay, what is infinite banking? Unfortunately, a lot of people have a misconception of what it is because they have a misconception of what life insurance is. And they have that misconception because they've gotten it from somebody else. But infinite banking and becoming your own banker gives you the ability to secede from the fractional lending business that this country has been in since 1933. What do I mean by that? Every time somebody goes to a bank and signs a loan document, that money is literally created out of thin air. Every time that happens, it creates inflation because all of a sudden there's money in the market that was never there before. So every time we take loans, whether it's a mortgage, an automobile, a student loan, whatever, we create to our own downfall by enhancing the inflation rate that we have. So becoming your own banker allows you to unplug from that situation, and it allows you to recapture all the interest that you're currently giving to somebody else. And if you do it correctly and you follow the plan and really become your own banker, not only that, but you can recapture all the money that you're giving to someone else. So if you buy a car and 4 or 5 years later, you have a 4 or 5-year-old car, well, now you also have all your money back instead of a 4 or 5-year-old car and somebody else has all the money.
Okay. So in regards to like a broad overview, basically you're just kind of like creating your own bank then?
Well, people use that term, create, you have your own bank. Nelson Nash, the creator of this, never used that term. He always said, become your own banker. It's like, you run that bank on the corner there. So it's the same thing. Life insurance, when it was designed, whole life insurance is really, it's actually, words have meaning, and it actually was mislabeled life insurance because actually it operates more like a bank with, as he says, a kick at the end, the death benefit. And that's, if people think of it that way, they complicate this, and it's a very simple procedure. If they just look at it as a bank and run it and handle it like a bank, it's not like the one on the corner that you're going to get a debit card or checks. But when you need to make a substantial purchase, whether it's appliances, whether it's a down payment for a home, an automobile, student loans, a wedding, whatever it is, if you use it like a bank and pay yourself, well, that's another misnomer, and pay the loan back, because you're really not borrowing your own money. Your money is being used as collateral for a loan. You get the money from the life insurance company. So essentially, your money is doing double duty. It's still growing, working for you while you're taking care of whatever that situation was.
That's pretty cool. One of the questions that I had received was like, my financial advisor says that, I should use like an IRA. Others, others say that, they should continue contributing to like a 401k because, their employer is matching that. Is infinite banking better than these options or retirement plans?
Karen, you want to go? Go ahead. Karen.
Well, definitely. I used to work for Alliance Capital, and most of the plans are deferred taxes. And people don't really think about that. They think about the here and now. Oh, I'm going to pay less taxes. It's a write-off, whatever their situation. But think about it. Right now, you're working. You have a mortgage, maybe. You have little ones running around the house. Those are called write-offs. When you become 60, 70, 75, do you want to pay taxes then when you're hopefully retiring, when all your write-offs have gone off and gotten married, when your home is pretty much paid for? And the other question is, has anybody in their lifetime remembered the tax rate going down? Because I haven't. So you're going to pay more taxes on a bigger amount and then forget the fees that they don't talk about. So my suggestion, or my answer, I should say, is no. Being able to put your money in a whole life policy where it's earning, interest and dividends, compounding daily, 365 days a year, and still use that money to maintain your lifestyle and keep yourself out of debt. And to be honest, the more you keep yourself out of debt, the more money you're making, because that interest that you would have been giving to someone else is now your retirement money. You're earning. So what I love, which is what makes me sort of excited, your policy is an asset. So that means your money is now an asset. So no, 401ks, IRAs, Roth are not better than your own private equity bank.
Interesting.
Let me just say, because Karen pretty much said everything about, I'll just add one thing. The gentleman who's called the father of the 401k, Ted Benner, made a statement in 2011. And his statement was that he had created a monster and it should be blown up. And as Karen said, we have given our money to a government entity or a third party to control our money. And since we don't know how long or how many situations can arise in the next 10, 20, 30, maybe even 40 years that you have literally locked away your money. And when you need it, maybe you need it for a wedding, or maybe the coronavirus hits and you're only 52 years old, but now your company says, hey, Scott, we got to let you go because we have no customers. Now you have to survive. And if you need that money, which we're told is our money, if it was our money, why would we have to pay a penalty to get it? Why would we have to pay taxes because we deferred it when you can go somewhere else and get your own money? So it's the old saying that you've heard many times, probably online. If you were a farmer, would you rather pay tax on the seed that you're buying, which is a smaller amount, or would you rather wait till harvest time and pay tax on the harvest that's much larger? And that is what people are doing. And there is a better way.
Wow, that's a good illustration. Can you give an example of how I would be able to use infinite banking to pay off mortgage debt or student debt or whatever within I guess you guys say within 9 years? How does that work?
Karen, you ready or I'll go?
It's really simple. What you're going to do is the same thing you're doing right now with one extra step. You're going to deposit your money into your life insurance policy as cash. And when you have the same amount that you were going to use to pay off your credit card, you're going to pay that debt. Now you own that debt and you start paying yourself back. So now you have the money that you would have been sending out. What I like to tell people is, how would you like to stop writing the debtor's name on that paid to the order of and slowly start putting your name there? And that's basically what you're doing. We teach you how you can change the name so that every month, instead of you writing those checks, putting them in the mailbox and never seeing again, you're now writing those checks, but you're sending it to your own bank. And as you have enough, you continually buy back your debt so that you're not paying American Express, student loan, your mortgage company, you're paying yourself. And you're growing. Not only are you eliminating debt, but you're growing your account, because that money you would have been sending out, that interest that adds up to hundreds of thousands of dollars, is now going to you. And it's done quickly. It's a snowball effect.
Yeah, well, and it's hard to show without numbers. So, maybe the next one we do, I can have some actual cases. But to answer your question, how can it be, how can I pay my mortgage off in 9 years? A lot of people think, well, let me pay, when I tell them that, they'll say to Karen or I, oh, I got to pay extra. I know I can pay extra on my mortgage. Then that's not what we do, because the problem is when you do that, you are giving control of your money to somebody else. And you don't know when, again, the coronavirus is going to hit, or, World Trade Center, or you're going to lose your job, or maybe you get sick or hurt, or you're going to need money for something. Once you've given it away, then you have to go on bended knees to get it back. You stay in control of your money until it gets paid off. So how do we do it so quickly? Most people, usually, they might not overpay their mortgage, but they certainly overpay their credit cards. What do I mean by that? They don't pay the minimum, because they haven't been told if they pay the minimum, it's going to take them X amount of years and all this interest they're going to pay. So they'll pay sometimes, it's incredible, but sometimes thousands of dollars a month. We call that using their money inefficiently, because they're overpaying the credit card, and then something happens, a hot water heater, something unexpected. The car breaks down. They finally need to get it repaired, or the hot water heater breaks. So something happens unexpected. What do? They use that same credit card that they just sent the extra money to. So I always pick up my credit card case, which I don't have here handy, and I hold it up and I go, this is credit card cocaine. Everybody wants to get off it, but they don't know how. So what we do is we show them how to, just by simply using their money more efficiently, not putting it in retirement accounts because it's not helping them, not overpaying the credit cards because it's not helping them. And we have proof, because we run a report and we show them it's going to take you 30 years or 28 years or 25 years to pay all this off. But if you just make, like Karen said, one little change, you're going to pay it off in 6, 7, 8 years. The credit cards usually are paid off 2 years, unless it's an extreme situation. It might be 3 years. The mortgage, student loans usually are a little longer because they're bigger.
So, and I've heard other people that are kind of concerned, is this going to take like a lot of time for me to learn? I mean, do I have to put a lot of effort into it? I mean, what is your answer to that? I mean, you guys pretty much grab them by the hand and help them along the way, right?
Well,
I'm the trainer.
let me say for you, let me say that. So I was going to say, not if you let Karen teach you how to do it. And not if you, I always tell people, it's a paradigm shift. I always say, open your head, take a lobotomy, take that brain out and put another one in. Because we're going to turn you 180 degrees, and we're going to tell you how to do things completely different than the way you've been told your whole life. And if you just keep it simple, think of it as a bank, and let Karen help you get going, it doesn't take long before the light bulb goes off. And as Nelson Nash always said, this is something that can't be taught. It needs to be caught. And one day, whether it's, I have a woman, it took 5 years. She literally paid off all her debt. She's down just to her mortgage and an automobile. She paid off 15 other debts, a second mortgage, every other debt. Took her 5 years to catch it. We have another woman in 1 month. She's paid off several debts because she caught it. And Karen can even elaborate because she handles most of those people.
Yeah. Well, being that I have my degree in teaching, it's fun. Instead of teaching preschool, I teach adults how they can break free. Because when I broke free of not worrying about my retirement and not worrying about the income, I learned quickly through Bill and the team. And now I'm teaching everyone else. In the beginning, I walk you through it by like I hold your hand. And when you show me that hey, Karen, I'm ready, then I make sure you have all the tools and I'm always here for you. But it's really simple. It's really frightening because we've been so brainwashed that when you step out on the plank of freedom, you're afraid that you're going to fall through. But we keep holding you until you know it's safe.
All right. So there is investment on a person's end to actually understand how it works, but you guys grab them by the hand, walk them through, each step of the way, and then when they're ready,
they fly.
Listen, Stefan, what a friend of mine explained to me. Sometimes, it's right in front of you. And he said to me, look, literally, we are teaching these people, we're telling them, become your own banker. So if I really was a banker and I had a bank and I hired you to come work for me, I just wouldn't put you at the desk and walk away. Wouldn't we have a training program? Wouldn't we explain to you, what do banks do? Banks take deposits. They're really something else, but they take deposits. This is just like a premium payment. They make deposits, premium payment. They also give loans. You get loans from your policy. And they also take repayments, repaying the loans. Once they get it, it really is so simple. That's why people say this sounds too good to be true. And, my short answer is, well, if it was bad, would you do it? If I showed you something that was bad, would you do it? And they can't believe it's this simple because people want to control our money because that funds their lifestyle. I just watched a video today, and people that make the most money in this country, when I say the most money, 0.01%. These are billionaires. They pay less in tax than the rest of us. Why is that? Because they have capital gains, because they learned the system. And what they do is they borrow from their life insurance policy. They just don't tell everybody else.
So we have a little golden nugget here, guys.
Yeah. Well, I found out through our upline that $40 billion of just two of the banks are in the same life insurance policies.
Wow. All right. So now that we're kind of talking about billionaires, let's get into business. How can this be used for business?
Well, as I always tell people, businessmen get this a lot quicker than the average person. Businessmen understand cash flow. I use this example whenever I talk to them. Can you have your best month in March, yet have trouble meeting your expenses in April? And most businessmen go, yeah, of course, that's cash flow. Well, do you go out of business because you don't have the money? I said, no, you've already solved that problem. How did you solve it? You probably have a line of credit at some commercial bank. So what do? You engage that line of credit, pay your bills, and now you have just hired a partner for your business. They don't show up at 6 a.m. if there's a problem. They don't stay till 10 o'clock at night. They don't help you with your clients, but they're there at the end of the month with their hand out. You know that's going to happen again because it's happened many times in the past. So why don't you set up your own bank, you become your own banker, use it like a bank, and the next time that happens, you provide the line of credit to yourself. Let your business pay it back because the business is going to get the tax write-offs, but the money is going back to you, which is going to be building your cash flow for the next situation, maybe an opportunity. But more importantly, you're building your retirement plan tax-free.
If I have cancer, diabetes, some kind of major type of thing in the past, would I qualify for that?
Yes, you would.
Yeah.
Yes, you would, because we de-accentuate the death benefit and we concentrate on the cash. The insurance carrier is not as worried or as concerned because they do know they're going to get their money when we all pass on. So unless you are on your deathbed or in the middle of, let's say, chemotherapy or something of that nature, we don't have the problem that most life insurance companies have because of this being a bank.
Yeah, they're a little more lenient. You know, life insurance companies, they do everything based on risk. That's why when the life insurance companies in the stock market, you know, when the last crash happened, a lot of them had their hands out like banks did. The companies we use are mutual life insurance companies. They're mutual companies. They operate totally different. Their stockholders are policy holders. So they don't have to be beholden to shareholders to get additional revenue to sell more stock. They care about the policy holders. So it's a whole different game for them.
So it's not like well, I guess I shouldn't be calling out people, but yeah. Interesting. All right. I have one more question for you guys. You know, in regards to like, you know, a criminal background, let's say, you know, something happened in the past, somebody has like a record, you know, but they've changed, you know, they've kind of gotten back into society. Would they be able to use this program as well?
Well, like everything else we do, it depends. It's not a straight yes or no answer. If you have a criminal past, it's a little bit more difficult to get life insurance. And it depends on what the violation was, you know, how severe it was. You might be a little easier if it was a white collar crime. But if you are on parole, obviously if you're in jail, but if you're on parole, they'll wait till you're off, you know, parole's over. And they look at everything they do, they look at risk. That's what they look at. It's certainly going to cost you a little more than the average person. So, you know, life insurance is based on risk. It's based on health. And you've created a little situation for you, but it's not, you know, it's not out of the question. Plus, you know, you can also insure somebody that has a relationship to you, and they can be the insured and you can still own the policy. Okay, so there's ways around it legally that they can still use it for banking. But, you know, every case is different, you know, and like I said, Karen usually is the one that does all that work, and she calls the insurance company and gets all those figures. But, you know, she might have something more to say. So
no, you covered it. Nelson Nash had quite a lot of policies, and they weren't all on himself. He had them on his grandchildren, his children. So there are other options. If you're in a business and you happen to have done something bad in the past, you might have an insurability on, you know, that coworker or, partner that you're with. There are many other options, but again, it is case by case. But it's good to find out, because a lot of people cancel themselves out thinking that I could never get this. And it doesn't cost anything to find out.
Very cool. Yeah, I was just asking because, you know, I've come across, you know, some people on LinkedIn that, you know, they have a criminal background, and, you know, basically I just want to make sure that everybody knows that, hey, this is something that, you know, they can use. So guys, I want to say thank you for your time. You know, I very much appreciate, you know, the answers to your questions. Bill and Karen, you know, well, I would like to invite you next Tuesday. Maybe we could do this on Tuesdays where we answer questions. I'm not able to look at questions that might be on LinkedIn right now, so I'm sorry, guys. But in the meantime, if anybody has, you know, further questions, or if they want to find out more about it, you know, what are your suggestions?
Okay, so I was just holding up. If you want to get more information, this is the book, Becoming Your Own Banker by R. Nelson Nash. It's 92 pages. You can probably read it in 2 or 3 hours. It'll, you know, just read it the first time and read it again. It'll give you an idea of some of the things we're talking about. But if you're talking about finance, educate yourself. Don't put it in somebody else's hands. You know, Karen and I tell everyone the same thing. Don't believe a word we tell you. Do your own legwork, because the numbers do not lie. Everything we do is totally guaranteed. The only thing that isn't is the client. But if you follow the plan, it will be at least those numbers, probably higher.
And also, we're both on LinkedIn. We participate in LinkedIn quite often. You know, reach out, connect with us. If you have questions about anything, retirement, saving for college, starting a business, getting out of debt, just ask. We are here to teach you. We're not here to sell you anything. The product sells itself. So ask us anything that you have, and we will get you that answer. We look forward to making you feel as comfortable as we do financially.
Awesome. Excuse me. In the description on this webinar type thing, I had put like a little link on the bottom where people could fill in like a form, and basically that would go out to you guys where you'd be able to like tailor a plan specific to their needs, and you'd be able to go over it with them, you know, for free, obviously. So guys, I very much appreciate it. Thank you very, very much, and I look forward to seeing you again.
We appreciate you too. Thank you, Stefan.
Yes, thanks for inviting us, Stefan. You have a great weekend, and we're here to honor all those that allowed us to be on this Zoom today, that gave their lives, sometimes their arms, their legs, sometimes lost their sensibilities of what they saw. But because of them, we're able to talk today on this Zoom. So remember them over the weekend when you're at the beach. Remember the beach they were on in 1941.
Thank you, guys. Thank you. Bye.
Bye.
Thank you guys.